1,100, yes.
In continuation with this last class, okay? How much is the bank overdraft? It is 1,100.
100.
Okay, next.
1,100.
Assalamu alaikum Hussein, how are you?
Walaikum salam, Dr.
Have you done, Hussein?
I'm fine, what about
How
you?
are you? Alhamdulillah. Have you done this?
Yeah, we done it last class.
Yeah. How much is see the things? We have done this now. How much you will get? How much is this one is how much? 22,500. 22,500 plus 12,000 plus how much is the current assets? How much is the current assets? 900. 900.
Yeah.
3, 1, 43, 900. Total it comes to how much?
67600.
Huh?
67.
How much?
67600. And it's
No,
67600.
22,500 plus 12,000 plus 43,900. How much?
12,000. Yeah, 12,000. Okay.
How much?
400.
78,400. Is it okay? Now, are you clear about this?
78,400, yes. Yes.
Take your time. Okay. Next, what is the value here? Tell me. What should be the value here? Deferred tax. How much I should write?
Second.
It is there on the screen. You have to work it out. That's all. You have to identify. We already calculated. Search the screen. You will find it out. It is on the screen.
30,250.
Huh?
30,250.
13,250. Where it is there? Check. You are very near. You are very near. How much we have calculated deferred tax? We have deferred tax given in the trial balance is how much? 13,250. Tax base is how much? 7,000. Gain on revaluation how much? 4,000. Is it? Total 11,000. 11,000 into 30%. How much we got deferred tax?
3,300.
3,300.
Yeah. 3,300, yes.
Is it at 3,300? Now what is the total?
Yeah. 7,874,400.
Total assets, total liabilities. Total equity and liabilities, okay? Total equity and liabilities. How much? 78,400. Is it clear to you?
Yes.
Yes, Mazin, Hussein, and Sumayya. I expected that you have completed this one, my dear.
Actually, doctor, I did mistake. In equity, it's supposed to be 30,000. I calculated 3,000. That's why I'm seeing very big difference with me. So it's make me confused.
No problem.
I thought maybe I have made mistake in the difference.
Yes, another. Yeah,
No,
I will tell you. I will tell you like now. In examination, unfortunately, extreme cases, if it is not tallied, don't get panic. Understand, but don't get where, yes, it is not, it is panic, I have not, the balance sheet is not tallied, I will lose marks. No. Every step they will give you marks. Okay. For the balance sheet total, it will be maximum half mark or it will be maximum 1 mark. Assume, take example, I am telling you this is the secret of success. If you have done 3,000 instead of 30,000, okay, 3,000, they will deduct only for 30, this one, they will, how much they will deduct? They will deduct only, this is going to be how much? Assume this is going to be only 1 mark. Is that they will give stepwise marking. Okay, they will give stepwise marking. Only 1 mark will go, that's all. Other marks will be there. Assume it is for 12 marks, how much you will lose? You will lose only 1 mark. Okay, you will not lose any other marks. If you have done 3,000, but you have done total right, they will not deduct marks for the total. Okay, they will deduct marks. That means they will not deduct marks twice. They will only deduct marks one. Assume you have, see, we have done this. Is it right? Now I will tell you. Instead of 1,100, how much we have written? We have written 1,000. Is it right? This is the one which has been given in the trial balance, and the same value we are doing. We are not doing any adjustment. If you see the marking scheme, it will be how much? It will be half mark will be there. Mark will be there. Half mark will be there. They will only deduct half mark. Okay. Totaling, they will not deduct again. Okay. They will deduct only half mark for 1,000 or 1,100. That's all. Okay. So don't get panic that people, what they will do, they'll say that, oh, I have done. These people will pass. As a matter of fact, you cannot imagine. My experience is the people who said that I have done mistakes, I have done this, my balance sheet has not been tallied, but they have done everything correct. Only one small, because of one small mistake, balance sheet is not tallied. That doesn't make any difference. Okay, this I have not told earlier, but this is what the fact. Is it okay about this?
Yes, doctor.
Okay. Very few people in tax, see, that is the reason people will score marks in calculations. Calculation papers, it's almost we will not do that much marks as such. Okay, can I start this one?
Yeah, doctor.
The following information has been extracted from the accounting records. Okay, estimated income tax how much? 75,000. Is that estimated income tax is how much? 7. Income tax paid during the year is how much? 80,000. Is that how much you have paid income tax? 80,000. Means, see, you have estimated 75, but you paid 80. Means you have made under provision or over provision? We have made under provision or over provision? This is estimated amount. Okay, this is estimated amount. Is that estimated? See, I will put like this for your understanding. Is that 2,000, this is 2,000 and this is 2001. Okay, we have estimated. Is that how much you have estimated? 75,000. Is that this is the estimate? How much you have paid? You have paid 80,000.
Doctor, the screen not showing.
Pardon?
The screen not showing.
It's showing with me. It's okay, doctor.
It's okay, Sumaya?
Yes, doctor. Okay.
It's okay?
Yeah.
Yes, Hussein, it's okay?
That's good.
Okay? Now, this is the estimated amount. Is it right? This is the amount we have estimated. Okay? This is the estimated amount. But we have paid more. We have paid more. How much is the difference? Difference is how much? Difference is 5,000. We have overestimated or underestimated?
Underestimated?
Underestimated. We have underestimate. Is it? Now, how much they have paid? How much they have paid? They have how much they have estimated in 2001. Again in 2001 they have estimated 83,000. Is it? 83,000 means last year also you have to make an estimation 2000. Is it? 2001 means this year what they are asking us, what is the question? Select the amount that will be shown as an expense in the profit and loss account for the year ended 31st December 2001 as a liability in the statement of financial position. Now, you have to tell how much you have to show. How much you have to show as a liability. Income tax, how much first is, how much you have to show the expense in the year 2001?
88,000.
How?
83 and 5,000.
83 plus 5,000.
5,000.
Okay. 83 plus 5,000. And how much you have to show in the income tax liability?
78,000.
Statement of financial position. How much is the estimation for the current year? Current year estimation is how much?
83.
This is the provision.
Yeah.
This is the provision. This is the provision is nothing but the current liability. Is it? This is the provision is nothing but the current liability. How much you have to show in the current liability? We have to show in the current liability how much? 83,000. Whereas in the balance sheet, how much you have to show? Sorry, in the
88.
profit and loss account, we have to show 88. In the balance sheet, we have to show 83.
83.
Okay? Fine. Next.
Okay.
Tamsin accounting records show the following. Income tax payable on current year profit 6, over provision previous year 4-5, opening balance deferred tax and closing balance deferred tax. Is it? Opening balance deferred tax and closing balance deferred tax. Fine. Now, see the things. Income tax payable. How much is the income tax payable? Payable is nothing but the provision. Okay. Is it right? Now, they have made over provision in relation to the previous year. Is it right? How much they have made over provision? Previous year is
4,000.
4,500. If they have made over provision in the previous year, means the current means the current year how much it will decrease? It will decrease by how much? 4,500.
500.
Okay, means how much is there? It will come to how much? 55,500. Okay, now opening balance is how much? See the thing. Opening balance, it is a liability. Okay, opening balance. Opening balance is 2,600. Closing balance is how much? 3,200. Is it? Opening balance is 2,600. Closing balance is 3,200. Means how much is the difference? How much is the difference in deferred tax?
600.
This 600. This 600 in the deferred tax is increase. Okay, this 600 in the deferred tax is increase. If a deferred tax is increased, it has to be. I will write like this. Okay, for this is only for your explanation. How much is the current year tax? Current year tax payable. Is it right? Current year tax payable is how much? 60,000 minus. Okay, over provision. Okay, minus over provision. Over provision last year. Is it over provision previous year? How much is the over provision previous year? 4,500. Okay, 4,500. It comes to how much? 55,500. Okay, it comes to how much? 55,500. Now, we are talking about the deferred tax. How much is the deferred tax? See, in simple terms, closing balance is how much? Closing balance is 3,200. 3,200 minus opening balance is how much? 2,600. Difference is increase in deferred tax. How much? 600. Okay, increase in add increase. I am putting it like this. Is it right? Increase in deferred tax. How much? 600. Total comes to how much? Total comes to 56,100. Is it clear to you, understanding or not? Last year, current year, you have to pay 60,000. There is a credit balance is there in the provision. Okay, how much? 4,500 minus. Now deferred tax. Closing balance is given, opening balance. Closing balance is more, opening balance is less. If closing balance is more, it's nothing but we have to add increase in the deferred tax during the year. What is the income tax expense to be recognized in the profit and loss account? The income tax expense to be recognized in the profit and loss account. See, what we have to recognize in profit and loss account, what we have to recognize in statement of financial position. Be clear about that. In the profit and loss account, is that in the profit and loss account, in the profit and loss account, we will recognize what we have paid. Okay, in the statement of financial position, we will recognize what is the provision. The net amount paid net, okay, paid net amount, we will recognize that. Whereas in the statement of financial position, we will recognize the what we estimated provision. They are asking what is the income tax expense. Income tax expense, how much you have to recognize? 56,100. Is it clear to you?
Doctor, again, just go up a little bit.
In the profit and loss, see what is there.
No,
Huh?
I just want to write this one.
Okay,
for
okay.
My reference.
Okay.
All right, doctor.
Fine. Now,
Yeah.
yes, Hussein, it is for you. Okay, it is for everyone. Okay, for a piece of machinery cost 500. The tax depreciation to date amounted to 2220. The depreciation charge in financial statement is how much? 100. The tax rate is 30. What is the deferred tax liability? Is that what is the deferred tax liability? What is the deferred tax liability? What is the formula for deferred tax liability? Is it deferred tax liability is equal to, yes, tell me please.
Yeah. The formula.
Temporary
Yeah.
difference in times tax rate. Okay, times tax rate.
Yes.
Okay, now what is the temporary they have given? Is it right? What is the, as per tax depreciation is how much? Tax depreciation is equal to 220. Is it? Financial depreciation how much? Financial depreciation is 100. Okay, financial depreciation is 100. How much is the difference we'll get? We'll get a difference of 120. Okay, we get a difference of 120. This is called as temporary difference. Times, what is the tax rate? Tax rate is 30%. It comes to how much? 36. Is it? It comes to how much? 36. This is the deferred tax. Any doubt? Stop me. Is it clear?
Yes, doctor. Yeah.
Fine. Prepares for question number 4. Prepares the financial statements following for the 2001 to 2003. Okay, they are prepared for 2001, 2002, 2003. Okay, in while doing MCQ, don't have any formality. They will give you pen, paper, pencil will be there, pen will be there. You can do roughly. Okay, but most important clearly. Okay. 2001, 2002 and 2003. What they are saying that, fine, the entity pay income tax at the rate of 30% and incorporate this figure in the year-end account. The actual amount of tax paid is how much? 28,900 and 37,200. Is that 28,900? How much they are saying? They are estimating that there will be a 30%. Is that income tax is how much? 30%. Is that they are estimating? Estimating is nothing but the provision. Okay, estimating is nothing but the provision. But actually, how much they are paying? They are paying 28,900 and 37. The difference between the estimation and the income tax paid is under provision or over provision. Okay, under provision or over provision. First we have to know what is the under provision and what is the over provision. Apart from that, they are saying that every year how much they are paying? They are paying 30%. Is that 30% on into 30%? How much is there? 30% is here 30,000. Is it right? Here how much? 36,000. Here how much? 33,000. Okay, here how much? 33,000. Fine. This is the amount income tax expenses. Okay, this is the estimates they are doing. Okay, they are doing the estimates. Definitely there will be under provision or there will be an over provision. Fine. There will be an under provision or there will be over provision. Now what we have to do? First you have to calculate, is that? First you have to calculate what is the income tax expense. Is that income tax expense? Is that income tax expense? How much is their income tax expense? What is the estimate? Is that estimate? I am taking the estimate from here only. Okay, I am taking the estimate from here only. Fine. 30,000. Is it right? 30,000, 36,000, 36,000 and 33,000. Okay, 36, 33 and 30. Now, what we have to do? We have to say how much. See, they have not done anything on 2000. It is 2001, 2001 and 2002. Is it 2001 and 2002? We have to know how much is 2001 and 2003. Nothing is there. Okay, 2003 is nothing is there. One. Now what we have to do? We have estimated the amount. Fine. We should know whether the provision, is it, whether we have made a under provision or over provision. Is it, whether there is a under provision or over provision. 1 minute. We have to know whether it is a under provision or over provision. Under or over provision. Put it as working note 1. Okay, put it as working note 1. I am just, okay, here you can take it. Working note 1. How much is the estimate they have made? They have made
30,000.
They have made estimate for 2001. Okay, 2001 and 2002. Nothing is there in 2003. Okay, nothing is there. What is the estimate they have made? They have made estimate of how much? 30,000 and 36,000. Okay, how much they have paid? Amount tax paid. Tax paid is how much? 28,900 and 37,200. Is it 28,900 and 37,200? Take the difference. We are not going to say difference. How much is the difference? Now you have to tell 2001 under provision or over provision?
2001 over provision.
Over provision. How much is the over provision?
Difference between.
Is that over provision is how much? This is the over provision. Okay, this is the over provision. And 2002 how much?
Under.
Under provision. Means they have estimated less, they have paid more. Okay, how much is there? Is it? This is under provision. If it is over provision, we will minus or we will plus?
Minus.
Minus. Okay, we will minus. 2001. Is it right? 2001. Is it? 2001. Is it? 2001. Now, how much we'll take in 2001? We'll take in 2001 or we'll take in 2002? Under over provision. Last year. Is it right? Last year they have made over provision. Is it right? For 2002, there is what? This is last year over provision. Okay, this is 2001 is over. Okay, 2000 after paying 2001, there is nothing. We are not going to do anything here. Is it right? We are not going. We have paid 28,900. There is a over provision of 1,100, which will be taken in the year. Which year? We will take in the year 2002. Okay, we take in the year 2002, because all the time what we'll say, we have made over provision last year. Is that we have made over provision last year. 2001 over provision will be taken for 2002. Is that 2001 over provision will be taken to 2002. How much is going to happen? Is that here how much we are paying here? We are paying, see, we are paying how much? It is how much? It is 30,000. Is that? And here it is how much? 36 minus 1,100. It comes to
25.
900. 5 minus 1, 4. 34,900. Is it? Now, they have made a under provision. Means they have to pay extra. Is it right? They have to pay extra amount. How much you have to? They have to pay extra amount. They have to pay. They have to pay last year also. Is that they have to under provision? Is that? I will put the thing. Don't get confused. Okay, this is over provision. Is it right? This is over provision. We are following the same rules. This is the under provision. Is it right? How much we'll get? We'll get 34,200. Is it? We'll get how much? 34,200. Is it right? This is going to be called as a income tax expense. Okay, this is called as a income tax expense. Okay, are you clear about this? We have to make an estimate, and we should know whether we have done under provision or over provision. If it is 2001, it will not be reflected in 2001. It will be reflected next year. If it is in 2002, it will be reflected next year, not in the current year. Fine. Are you clear about this? This is the now. How much you are going to show in income tax expense? Income tax expense is how much? 330,000, 34,900 and 35. This is we are going to show in where? This we are going to show in profit and loss account. Okay, this we are going to show in profit and loss account. Okay, profit expense. Okay, expense. How you have to show? Again I will write in profit and loss account. How we have to show? Only extract. Okay, we are talking only about extract. How much? You have to say 30,000 minus, okay, 34,900 and 34,200. This much we have to show in the profit and loss account. In the balance sheet, now you see the difference. You will find real thing. In the balance sheet, what we will show? We will show estimate or we will show provision? In the balance sheet, what I told you just now. Where I have said yes. This is very important. In the profit and loss account, we will show what is the amount we have paid. In the balance sheet, we will show you what is the provision. Okay, keep it in mind. It will not change. Okay, it will never change. Is it right? Now, how much you have made the provision? Tell me.
1,100.
Provision, only provision.
Yeah.
How much?
For 2,000, 1,100.
No, provision is this much. Provision is this much. How much we have made provision?
The estimation it will be.
Estimation. Is it right? This is the prepaid. The following profits were recorded. Is that 2,000? Now, what they say? The entity pays at the rate of 30% and incorporate this figure in the year-end accounts. Is it right? Now, the actual amount is the amount which has been paid. Okay, the actual amount of tax paid. Is that the actual amount of tax paid is how much? 28,937. But what is the provision? How much you are doing provision? You are doing a provision of 30%. Okay, 30% on the estimated profits. Is it on the profits before tax? In the statement of financial statement position, is it in the statement of financial position? In the statement of financial position, we will calculate current liabilities. Is that we will say it is a current liabilities. In the current liabilities, what we'll do? Whatever the profits are there times tax rate. Okay, profits are there from the, how much is there? 2001, 2002, 2003. Is right? It is here. It is how much? 30,000, 36,000 and 33,000. I am expecting some doubt from your side. You have to ask me something. Otherwise, I will tell you what is missing from your side. Ask one doubt.
Deferred tax.
No, where is deferred tax? There is no deferred tax is there.
The income tax.
Income tax. Okay, income tax. Income tax, how much? Yeah, the tax paid in respect 2001 and 2002. How much they have paid? 28,900, 37,200. Is that 28,900 and 37,200? But in the income statement, how much we are showing? We are showing how much? 30,000, 34 and 34,200. Okay. In the profit income statement, we are showing 34. Now, what happens? Provision is 36,000. Is it? Provision is 36,000. We have made provision of 36,000. How much is the over provision? Over provision is 1,100. Is it? 1,100. Over provision. See the thing. What I told you, again I am repeating this. When we are showing, see, I have mentioned very clearly here. When we are showing in the profit and loss account, we will show the net amount. Is that we have to show the net amount. Net amount is nothing but the estimate minus or plus over provision or under provision. If it is over provision, minus. If it is under provision, it is plus. If over provision, we have enough money. Is it right? We have enough money. Again, we are not going to deduct from the profits. So you should ask me that why it has been 28,900 is given in the question, but why we are putting it as a 34,900, because there is a under provision and over provision. In the income statement, we will show the net amount. Okay, in the income statement, keep it in mind. Keep it in mind. We will convert this. Once we are doing the things, automatically your confidence will get consolidated. Okay, is it clear to you?
Yes, Doctor. Clear.
It's a little bit, but keep it in mind. Over provision minus, under provision plus. First rule. Second rule, profit and loss account, net amount. Statement of financial position, first position, provision amount.
Provision.
Okay, only two rules are there. Okay, automatically it will say. CP introduced a warranty scheme. We will cover in some way, okay, in the next. Warranty scheme during the year 31st December. CP statement of financial position, warranty provision 65,000. Is it? For the purpose, warranty costs are deductible when claims are paid. The rate tax is 20%. What is the double entry necessary? Tax rate is how much? 20%. Is it right? Tax rate is how much? 20%. Warranty provision is how much? Warranty provision is 20%. Warranty amount is how much? Warranty amount is 65,000. Now
65.
Warranty means what? It is in the current year or in future? Future. Warranty. I am writing this. Warranty will be in future. If it is in future, this is going to be identified as a deferred tax liability. Is it? This is going to be identified as a deferred tax liability. How much is the warranty? Warranty is 65,000. Okay, warranty is different. What is the tax rate? Tax rate is 20%. Okay, deferred tax liability will be how much? Deferred tax liability will be 13,000. Are you okay with this?
Yes.
Okay, deferred tax. Now, what they are saying, for tax for warranty costs are deductible when claims were paid. Is it right? When claims were paid, warranty will be deducted. Okay, warranty. What is to record the deferred tax impact on the warranty provision? Can you tell me what is debit and credit? When deferred tax will be paid, Is it right? Listen carefully. When claims are paid, now they are paying. Now they are paying. No, in future they will pay. Is it right? In future they will pay. Now they are not paying. See, what is the concept of warranty? Warranty is you may claim or you will not claim. Okay, there will be a claim or there will not be a claim. When you are talking about the claim or you are not going to be claimed, is that are deductible when claims are paid. When claims are paid. Now you have to create the warranty provision. Understand? You have to create the warranty provision for that. Deferred tax. Is that when you are creating a warranty provision, is that you are creating an asset. Okay, you are creating an asset. It's not a liability. Understand point? You are creating an asset. You are creating a provision. Is that means you are if it is paid, definitely then it will be an expense. If it is not paid, it is not an expense. Okay, if it is paid, then it will be expense. Now we are not paying. We are paying that in future it will be paid. Is it right? In future it will be paid. If it is in future it will be paid, then you will pay tax in future, not now. Yes, tell me. Tell me. Is that in future we will, if it is paid, in future you will pay, not now. Means when you are going to pay in future, what will happen? Don't think about right now, okay? When you are paying in future, is it right? What will happen? Debit will be income tax, okay? Debit will be income tax. And credit will be what? The credit will be deferred tax. Okay, deferred tax. That this will happen when it is going to be paid. Okay, this will happen when it will be paid. Okay, when it will be paid. I am writing this. When it will be paid in future. Here debit expenses, you have to estimate the liability. And now in terms of warranty, what we have to pass here? Are we paying now?
No, in future.
Are you paying now? You are not paying now. If you are not paying now, it is going to be called, it will be your income tax. If this is the first time you are doing this, is that this is the first time you are doing this? Pardon?
It's liability account.
Income tax expense. This is the original, this is the amount when it is going to be paid. Is that when it is going to be paid, we have to write like the debit income tax expenses and credit deferred tax. Okay. Now again I will say this. Is that this is next. What will happen to this again? Is that when is that now debit will be deferred tax, credit will be bank or cash. Is that steps are very important. When you are making a provision, what we have to do, when we are making a payment, what you have to do. Is that in totality what will happen? Your deferred tax, is that your deferred tax will get cancelled. It is nothing but income tax divided by bank on the warranty. Is that income tax divided by warranty? Income tax, it will be the debit, credit will be the bank. Okay, when it has going to be paid. Now when we are creating a provision for the warranty, we are setting aside some amount. Yeah, we are setting aside some amount. When you are setting aside some amount, we are setting aside in the form of what? Deferred tax asset. First time you are doing, is it? Just keep it in mind. It is little bit new for you. Okay, I'm telling you in advance. It is little bit new for you. When the warranty is, what is the concept of warranty? It may or it may not be claimed. Okay, it may. If it is not claimed, the amount will be yours. If it is claimed, then you have to pay. If it is, we assume that we are not going, it may be paid. We assume. When we are assuming it may be paid, till it is not paid, we are going to treat it as an asset. Okay, we are going to treat it as an asset. Once it is paid, definitely we will cancel it. Then we will make a provision, debit the income tax, and whenever it is going to be claimed, then what will happen? Deferred tax times bank. At this point of time, we identify that deferred tax asset is how much? 13,000. Income tax expense will be how much? 13,000. We are, again I'm saying, we are only making a warranty provision. Is that? We are making only a warranty provision. This is the one. Is it clear or it is little bit difficult? Tell me very clear.
Yeah, little bit difficult.
Yes, I can understand. Before you say, I know the pulse of the students, okay? I know the pulse of the students. Because why it is difficult? We are doing it for the first time. That's all. Is it clear to you?
Yes, doctor.
Fine. I know, is it? It is. Fine. Now, what we have learned in this lecture is we have learned tax base, we have learned temporary difference, we have learned the deferred tax liabilities. Okay, we have learned deferred tax liability. When you are revising it, you revise every chapter, you revise the problem which is given in the test, the complete financial statements. Okay, complete financial statements. Are you clear about this? We have done two things. One we have done in test your understanding 3, and one we have done test your understanding 4. Okay?
Okay.
Fine. Next. Can I go to the next one?
Yes.